What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is May 30th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to spend some time to try to answer a key question that many people have on their minds at the moment. As we enter into the month of June, or the last month of the first half of 2020, many people are curious about what my thoughts are on the preceding 6 months going into the close of the full year. And I think it's a very important question, especially now as we're at a really key point of resistance. Many people are curious as to whether or not we're going to break through that resistance, go to new relative highs, or if we're going to possibly pull back down or go stagnant to the side towards 6,000 to 7,000. I think these are all very fair questions, and I want to spend some time to try to answer them in as a non-biased of a fashion as I possibly can, especially sharing my methods as to how I determine my answer. Okay, so we've got a lot of things to talk about. Let's just go ahead and dive straight into it. So to start, before anything, guys, I have to explain to you all how I actually go about analyzing markets. A while back, I did about a 40-minute video called How to Become a Macro Trader that I highly recommend all of you go out and check right now. It's completely free. It's on YouTube. It just basically dives in and shows a lot of good examples as to how I analyze charts. And sure, my strategy does evolve and change over time, but that's the core principle of what I've really built up over the last few years that I've been trading across a variety of markets, including cryptocurrencies. So let's go ahead and talk about those three principles. If you just want the short, sweet, and to the point summary, I don't blame you. There's really three things that I look for. I do price analysis. I do look for indicators, signaling strength in this case in regards to the asset that I'm looking at. And along with that, I look for the trend or the narrative in this case that's going to determine why an asset should move higher or should go lower in the long term. So I'll go ahead and we'll talk about these principles a little bit in depth. And as we go through analyzing Bitcoin, it'll become clear how I use these principles. So let's first start off in regards to price action. When we take a look here at Bitcoin over the last few years, right? We're taking a look at the weekly chart all the way back here from 2016 to the current modern day reality of May in 2020 as we're going into the month of June here over the next couple of hours. So taking a look at the chart here, we've been building up on the longer term, a very long-term wedge here for price. We've been discussing this a lot on the channel, the higher lows that we've been setting, the lower highs that we've been setting as well. This has been building a coil of price here. I like to call it basically price is coiling in here towards an inflection point. It's going to make some kind of move. This is what wedges usually lead to. And a wedge itself is not inherently bullish, nor is it inherently bearish. But right now, the bulls are at favor right now because we have been for multiple weeks consistently pushing up against this resistance. So we have a chance here very much for this to possibly break out. Now, if we start to get a massive sell side rejection here, if we come down here, for example, down to around 9,000 or 8,800 or 8,750, one of those kind of even levels around there that signal that we're actually going to be dipping below the key level of support that we've been holding here for the past few weeks. That would be something where the bears would start to take over. But so far from price, the long-term trend here is signaling that we're setting higher lows, lower highs, that the inflection point looks like it wants to push for higher levels. And so far, we've been continuing a bullish uptrend since all the way back here in early March, since we had the dramatic sell-off in price. So seeing this recovery here, for the most part, price action is pretty bullish, right? And second off here, as we, again, we'll jump back into price in a moment, taking a look at one of our key indicators here, which is an aggregate indicator one of our community members, Sandeep, put together. It's known as the SMS indicator. It aggregates three of my favorite indicators on the market: the squeeze momentum indicator, the MACD, and the stochastic RSI. And it's a scoring mechanism that takes into mind what we look for those indicators to signal bullish patterns. And right now, ever since back here in April, we flipped over to over 3 points out of 5, which means that the indicator is bullish. And we've been continuing to hold that trend above 5 points, or at least above 3 points, for quite some time. So as long as this holds on the indicator side, things are looking quite optimistic as well. So on price, on the indicators, we're looking good. And price, again, gives us a range here where we could possibly come up above here, and I'll talk a little bit more about this later on in comparison to gold, about how we could continue to come up here on the more optimistic case scenario, push sideways and make resistance new support, and then eventually pull up towards the end of 2020 and into 2021, back above 20,000 and on to the new cycle. But taking all this into mind here, guys, you can do as much TA as you want. You can look at as many indicators as you want, but if there's not a fundamental narrative that's going to drive something, there's not a thesis to invest, okay? I want to be very clear. I mean, sometimes, yeah, I'm not saying that in this case there needs to be an absolute fundamental, like the market's based on fundamentals, or that there isn't speculation. I'm not even talking or negating speculation in that case. That's a huge part in all of this. But I want to make it very clear that there needs to be a fundamental drive. There needs to be a fundamental shift in something that we talk about, which is inflows and outflows. There needs to be liquidity moving from other markets into cryptocurrency markets, or there needs to be money moving out of crypto markets into another market for price to go down, and vice versa. It switches both ways. So if we want crypto to reach, for example, as many people have talked about, these big levels of $100,000, $250,000, $1 million for Bitcoin, you need to understand where the liquidity is going to come from. Right? We don't just get there by you and I going out and buying Bitcoin at that price. It's mass amounts, billions, if not trillions of dollars of institutional liquidity, as well as retail liquidity, everyday people like you and I, who, again, are going to play a role in driving that price. Okay, so I know I've rambled on a bit there. Let's go ahead and talk a little bit about this narrative. So there's been a lot of people talking about this near 900-day accumulation. We're about to hit 900 days, where we've been ever since the peak back in 2017. Or again, Bitcoin's price has been definitely getting back up to higher levels. We're back up towards nearly 5-digit territory as we're up towards the upper $9,000 range. But we still haven't gotten to new all-time highs. And many people are, again, feeling the pain here. Many people are curious about whether or not we can get above there. Well, this article from Cointelegraph brought up a really interesting chart here that I wanted to talk about. It signaled, again, not only the lower highs and the higher lows, but also a potential idea for what could happen here. A reasonable expectation that over the course of not only just the latter half of this year, but possibly stepping a little bit into 2021, that we could possibly get a breakout, setting a higher high, breaking this trend here of lower highs, and also set, yet again, a higher low. This is what you want to see if you're looking for the bullish narrative here. This is what we want to see. Now, what's going to actually cause something like this to happen? Well, we have to talk about the supply and demand side economics of Bitcoin. As many people probably already know about, the halving event is going to play a very large role in this. But it's not just the halving event. That's one part of the equation. That's the supply side being reduced in this case. And we'll talk about a little bit about that more just for some more clarification. But outside of that as well, you also have, in this case, the demand side. And demand comes in two different forms. It's not only new demand in this case for people who are coming in and buying up Bitcoin, but also people who are not selling and are simply hodling or holding for the long term. Now, this has been one of the important things that I think many people haven't been diving into. I'm very big on data science because this is very clear public data that's important to keep in mind. So if we take a look at something known as the HODL waves, we can see that for the last year, right? Let me explain this better. Over 60% of Bitcoin, the current existing supply of Bitcoin, 60% has not moved from the current address that it's in for over a year. Okay, it's a very simple thing to take into mind. We can take a look at the direct one-year HODL wave right here on Bitcoin. Look into bitcoin.com. It's a free website you guys can go check out. And you can see here that we have a very interesting price chart here where it shows Bitcoin on the logarithmic chart, and then also the percentage of Bitcoin being held for a year or more. So as we can see, going through this chart, there are some fluctuations here, and roughly speaking, you can tell that a lot of what makes up this 60% has been held for much longer than just a year. So it's not exactly 1 year, it's longer than a year. But interestingly enough, if we take a look back at the previous cycle here, we see a sense of consistency in the trend here, where we start to get a really big uptick here as we start to enter into the bottom of the market. As we can see, the green here highlighting the last low of the first major bear market in cryptocurrencies. I mean, you could talk about some of the previous ones, but this was really when Bitcoin was a very, very infant market. The most relevant one we can talk about was the 2014 pullback going into 2015. And we can see here, as we start to get a spike here in the HODL wave, going all the way from 43% of Bitcoin being held for over a year to 54%, we started to set in a new low here in the market. And as we push sideways, that number remains steadily high here for some time. Now, an important thing to note is that as this number is going up over time, as more Bitcoin is being held, surely some of it is on exchanges, surely some of it is being sold. This is taking the UTXO model, or the unspent transaction output model of Bitcoin. Basically, Bitcoin basically tracking on chain whether or not a Bitcoin is moved or not. So yes, it's important to keep in mind that yes, some Bitcoin are going to be traded and sold on exchanges, But generally speaking, this number holding up higher means more people are hodling. They're not circulating it between exchanges. They're not trading it as excessively. And many people probably just holding it in their Bitcoin wallet. So, and you can see here the price, right? You start to see Bitcoin's price moving up as we get the halving event. And along with that as well, as most people are holding their Bitcoin, this creates the perfect dynamic for a kickstart to the next cycle. There's no other market that has this kind of interesting nature to it, where you have such a mentality of people holding the asset, and along with that as well, these halving events that lead towards a massive supply shock. So we'll dive throughout the video that kicks off these parabolic cycles. And what you see is as you start to kick off in the cycle and get back up to the previous highs, that's when you start to see a downward movement in the hodl wave here. Interestingly enough, you can see here that as we went down to 43%, almost setting the bottom, just 2% away from the hodl wave bottom, we set the new all-time high for Bitcoin at 20,000. Very interesting thing to take into mind. And now, as we see, we've started to kickstart that hodl wave again, back up to the range we saw back here, back in 2016. And it's interesting not only to note that Bitcoin is not only at a much higher valuation from the $200-something range that we were dealing with back there, all the way up here to nearly 5-digit territory at the same time. But second off, I think we're going to probably continue the hodl wave up to new highs, much like we did from over here to over here. I think that we could very likely, a very reasonable price target, or a hodl wave target in this case, to be more specific, would be somewhere around 65 to 70% over the next preceding months. And I think that this, alongside the halving event that's recently gone into effect, is going to be the major catalyst for what drives markets. Again, it's inflows and outflows. We're not getting the outflows here. We're not getting sell-side pressure on cryptocurrencies, but we are going to be getting an increased buy-side demand. So, where's that going to come from, right? We've already seen that people are holding the Bitcoin here. Where is it coming from? It's coming from a lot of different sources. It's coming from institutional players like Grayscale, who are generating ETNs, or exchange-traded notes, for people who are trading on equity or brokerage accounts, to be able to buy some stake in Bitcoin through the form of an ETN or something similar to an ETF. So Grayscale has been doubling up on its Bitcoin position. Over the last few months, there has been huge buy-side pressure from Grayscale. Just to dive directly into these tweets here for the straight substance here, guys. Kevin Rook here put out a good set of tweets here over the last week in regards to Grayscale, showcasing here how much Grayscale has been picking up in Bitcoin per quarter. You can see back here in 2018 and 2019 to really the demand back here for the ETF, or the ETN in this case, needing to actually get the physical Bitcoin to back the ETN. Surprisingly, it was quite small. I was thinking that it would be much higher back here, as we had a lot of retail interest back in 2018. But I think many people didn't think about the fact that there was an ETN. Well, nowadays, as it's become public knowledge, and a lot of people are realizing GPDC, which is the financial product that Grayscale runs, that allows you to basically invest portionally in Bitcoin, we can see here that it is ramped up pretty stellarly. And there's a lot of other ETN products across the world that are doing the exact same thing. And they're buying up and stacking a large amount of Bitcoin to physically, in a sense, back the ETN product. Along with this, we can see that this trend is not dying down anytime soon. In fact, we are growing at an exponential rate in regards to demand. Just taking a look since May 11th of 2020, since the halving event has gone into effect, we can see through public data that Grayscale alone as a company, that's not including any other buyers. It's not including other companies that are building certain financial products that are similar to their ETN. We're just talking about Grayscale. Since May of 2020, Grayscale has picked up more Bitcoin than has been mined since that same exact time period. Understanding that the vast majority of sell-side pressure on the market for Bitcoin comes from Bitcoin miners, this message has massive ramifications. This simple chart with 2 columns means everything for understanding the sheer shock and demand that's coming to Bitcoin at a time where we just had a 4-year halving cycle, where we had a halving in the new production of Bitcoin per block. We would have had double the amount of this on a monthly basis. Whatever amount you see here, right, that's coming in since May of 2020, or May 11th, this would be double the amount with the previous block structure, where we had double the event of rewarding miners for discovering a new block. This is huge. And again, we can see this through all kinds of different data pieces across the board. But one good way to visualize this is from a chart from Charts BTC, one of my people I follow here on Twitter. He's a really good guy, puts out a lot of interesting charts. And this is one here that actually really just kind of, in a visual sense, provides the visualization for a lot of sell-side pressure that comes in on a daily basis. There's some sell-side pressure that a lot of people don't realize that comes in pretty much every day, and that's a lot of this. The daily issuance of new Bitcoin being mined. Most miners operate on very thin profit margins, and if they want to keep their operations going and lock in those profits on the 3 to 5% they make on covering all the costs for their mining and eventually selling their Bitcoin, they need to sell it, right? So we can see here that as the halving event comes through, it leaves a long-lasting effect on the overall dollar amount. Now, as Bitcoin's price goes up, right, this value of the sell-side pressure will probably pick up as well, or the amount of Bitcoin being issued. But the interesting thing is that the buyers don't get affected by this. If price remains the same, the sell-side pressure declines, and the buyers are still buying like they were before. The halving event doesn't affect them. Their demand is still present. So imagine at the end of the day, just to put a simple analogy, imagine if we had apples, right? We had a basket of apples here in this case. And people love apples. People want to eat. They want to eat some calories. They need some nutrients. So we've got 10 people. There's 10 apples in the basket, right? So perfect equilibrium between supply and demand, right? And prices of apples had stayed around that range, whatever they were. Maybe it was $1 for the time being and stuff for quite some time. Well, now it comes to the point that there's now, for some odd reason, only 5 apples. There's still 10 people. And in that case, you can easily, on a fundamental basis, at a minimum, justify a doubling of valuation in the market there. But in the case of Bitcoin, it tends to be that we go through parabolic cycles. And this is where the narrative comes in, right? The narrative here that we are going to not only have a supply shock, but a massive demand shock. And if we take a step even further, there's a justification for all this as Bitcoin is becoming an emerging hedge at a time where people are looking for things that really actually don't provide a yield but won't penalize you for holding them. I know it sounds crazy, but this is the reality when it comes to savings accounts in a lot of countries across the world. Right now, many people are facing a negative interest rate on their savings account. They're being penalized for saving. And along with that, when it comes to government bonds and treasuries, there's a multi-trillion-dollar market of negative yielding bonds that are penalizing people for holding them, for giving the government money. It's an IOU that penalizes you. It doesn't make much sense. But people are looking for things that are non-correlated, that don't penalize them, that also, more than anything, like traditional currency or other types of traditional asset classes, can't be printed into oblivion. And that's why, again, we've already seen gold leading the way here. It's been a time-tested asset. I apologize, my charts are taking a second to load, guys. I don't know why my computer's going slow. But you can see here, taking a look at the long-term chart, this is a monthly chart for gold, all the way back since 2000 to the modern day. We can see that we were in a bear market for many years for gold. But what happened here? What happened back here in 2018 that changed the game? The Fed stopped printing money. They stopped playing into the funny game, boosting equities, boosting rampant speculation. People started to look for a hedge. They started to go into gold, something non-correlated. As the likelihood of a recession, a pullback, became even more likely, and with what happened globally over the last few months, I think people don't really want to talk about it or revisit it. It gave even more of a narrative for gold to go higher. And we've been kicking off one of the greatest uptrends ever. Now notice what we did here, right? We were in a long-term wedge. Once we broke out of that wedge, over the next preceding 4 months, right, after we had this first breakout month here, we had 4 months where we pushed sideways. And we made previous resistance support. After that, we kicked off the uptrend. That is what I think we're doing right here when it comes to Bitcoin. I think it's going to become very apparent over the next few months that as the halving event starts to truly affect the daily supply and demand economics of Bitcoin, as the unheard of institutional demand that's been coming through ever since people like Paul Tudor Jones have spoke highly of Bitcoin through funds like GBTC. And along with that as well, the narrative of the global macro story that we're living through right now continue to come into play. I think the price action and the technicals are going to follow. I think that we're going to likely come up here to 11,000. We're going to push sideways for a few coming months, just like gold, and inevitably break out of this wedge and kick off into the next cycle. It's a phenomenal time to be analyzing this market, guys. I can tell you all I'm most positioned in cryptocurrencies at the moment, and I'm putting my money where my mouth is. I believe this market has the potential to truly scale out, especially with how small it is right now. That's the key thing I always drive here, keeping in mind the kind of philosophy of a macro trader. You want to know about markets of scale. It's a lot easier for a market like cryptocurrencies to scale out at a current valuation roughly of, I think it's somewhere around 250, 275 billion. It changes a bit from time to time. But keeping it simple, maybe it's say $250 billion as a whole. To say that Bitcoin, which is probably a $150 billion asset, to say that that could go to $300 billion, it's not a challenge at all. Versus equity markets or bond markets or currency markets. For those to double, you're talking about trillions upon trillions of dollars of valuation needing to duplicate. You need a ton of liquidity in order to double that valuation. Going from a $50 to $100 trillion valuation is much more difficult than going from $150 to a $300 billion valuation, especially with the value proposition being so strong for Bitcoin. Anyways, I hope you all are doing well wherever you are. If you like this video, please drop a like and always consider subscribing as well as hitting the bell icon so you don't miss another video. One thing I want to share with you guys, as I always like to let you all know where I'm going, and if you're here towards the end of the video, it means you're probably one of our closer fans on the channel. I want to let you all know that I'm going to be attending a virtual conference, BlockDown 2020. I went to the previous one before. It was a really fun time. I'm not only going to be speaking there and be giving a keynote myself, but along with this, I'm going to be on a panel discussing with a few other people, and there's also going to be a really interesting debate between two individuals who I really admire. So we have not only Rune, but also Alex Brzezinski, who are some of the founding members of two projects that I like, not only Celsius Network, but along with that MakerDAO. They're going to be having a bit of a debate between the argument of CeFi versus DeFi, centralized finance versus decentralized finance. Now, I know many of you out there have been really interested to hear me talk about DeFi and get a little bit more in depth on it. So this might be an interesting conversation. Now, this is one where you'll have to buy one of the, I think, the higher tier tickets and stuff to see this debate. I'm not 100% certain on that. You can go ahead, you can figure that out if you look through the tiers and stuff, guys. I recommend you check it out, and there's a link down below in the description to find out some more information. But you can just get the free tickets if you'd like to come join the conference. I know the conference organizers as well as myself would love to see you there, and we can definitely talk and get to know one another more personally, especially during these interesting times we're living through. But all in all, guys, thank you all very much for watching the video, and I'll see you all in the next one. Stay tuned.